Corporations bought a record $1 trillion of their own shares last year, and buybacks have been a driver of the bull market for the past decade, with both stocks and buybacks trending higher. But a new report from Ned Davis Research says buybacks have been slowing down. In fact, some companies have been selling their shares. So what does that mean for the broader market? Joining us tonight is Eric Marshall, portfolio manager at the Hodges Funds. Nice to have you here, Eric. Welcome.
It's good to be here.
You have a few reasons why you think this is going on, but uncertainty is one of the main reasons. What type of uncertainty?
Well, I think as companies become more uncertain about the economy and interest rates, what's going on with global trade, they're more likely to take their cash flow and use it to pay down debt or stockpile it, because they don't know what the certainty of that cash flow is going to look like in the future. When they're more certain, they're more likely to return it to shareholders in the form of dividends or buyback programs or reinvest in the business.
Now, as we showed, there's been a correlation for the last decade of the buybacks increasing and the market going up at the same time. If this slowdown continues of buybacks, what do you think happens to the stock market?
Well, I think that, the buybacks have really provided an incremental buying of stocks at a time when there are fewer and fewer fundamental value investors out there, because more and more money is going into passive ETFs. So in the event that they slow down, it would be a negative. However, I think what we've seen in the last couple months has been a slowdown, but I wouldn't be too worried about it unless it really continues for an extended period of time. I think last year buybacks were up about 50% from the previous year. It's probably not going to increase 50% this year, but we could buy back as much as we did in 2018. It's still relatively early in the year.
All right. On that note, Eric Marshall with the Hodges Funds, thanks so much.